Welcome, Washington, D.C. Metro, to Ryan Sloper's Real Estate Radio, the most important hour of radio every Monday on 1580 AM, The Big Talker. Thank you for joining me this afternoon. For those of you who don't know or are not familiar with Real Estate Radio, it's a show dedicated to building the Washington, D.C. Metro's housing and credit markets one house at a time. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted advice. That's my message, and I will be delivering it to you guys every Monday from 2 to 3 p.m. right here on 1580 AM, The Big Talker. Joining me on our panel today is Louis Cammarosano, who's the general manager of HomeGain. Louis is often cited in the media as an industry expert in the Wall Street Journal, Forbes, CNN Money, Fox Business, Smart Money, MSN, and numerous others. We're going to discuss today with what happened in the markets over the last week and what's on deck this week that can affect you and your real estate decisions. A lot of things that are coming to mind. We do have the HomeGain National Survey for the what is it, Louis? Is the second quarter?
Third quarter.
Third quarter, rather. Sorry. Third quarter, which we talked about last week. We'll hit back on that again. So you guys, if you weren't listening, we can let you know what's going on as far as what homeowners and real estate agent or brokers feel about where home values are headed, which I think is it's a very good indicator of what the actual optimism or pessimism of our overall market across the national spectrum. And then next week we'll be able to break things down on a state level where, Louis, you guys are going to be releasing your state surveys tomorrow or the day after?
This week we'll be
This
releasing
week sometime.
about 5 to 10 of the states individually.
Okay. And if you guys are interested in checking out this survey, if you want the full version of it, you can go to blog.homegain.com, or you have it on the homepage as well at homegain.com. Um, let's just jump into that to start off, Louis. Why don't you give our listeners what the HomeGain survey found for the third quarter as far as what the overall consensus was amongst homeowners and real estate agents slash brokers?
Sure. The third quarter HomeGain survey shows that real estate professionals think that home prices will decrease 47% of them in the next 6 months. That's really not much change from the last time we did the survey last quarter, where 50% of agents expected home prices to decrease over the next 6 months. And remember, this is nationwide. And then increase, only 11% thought that they would increase versus 12% last quarter. The big change in the survey was with homeowners. In the second quarter, only 30% of homeowners thought that their home values would decrease in the coming 6 months. In the current survey, the third quarter, 45% of homeowners think that home prices will decrease in the coming 6 months. So that reflects the homeowners catching up to the real estate agents, who generally tend to be the cheerleaders of the real estate market. But we've seen over the course of the last 2 years, real estate agents becoming more and more pessimistic, or perhaps more realistic, as to the direction of home prices, and homeowners have just started to catch up to that pessimism.
What do you think, Louis, is one of the driving factors for that pessimism amongst homeowners? What is your personal opinion?
Well, I think it's a combination of reality. It's a combination of what the realtors are telling them, and it's a combination also of the media.
Yeah.
So they're not in the market all the time, and obviously there is a lag effect for a homeowner to realize that when they wake up and a year later that their home value has gone down a bit.
Right. And for a lot of people, we've discussed this numerous times on the show, if you guys have been listening in, that, the media's perception is sometimes the homeowner's perceived reality, where, just because they see signs going up of foreclosures or short sales on their street, they're automatically assuming that the market is going even further down. You know what I mean? If they go and pick up the flyer and it says, foreclosure, they look at the sales price and they're like, oh, goodness, this has dropped another $10,000 since last month.
Well, obviously, it's not good news to see those things. So if you're
No.
going to err on the side of optimism or pessimism, those are pessimistic signs,
Yep.
unintended.
Yeah, and there's a lot of articles out there, and the big main point of my show is to kind of break down what a lot of the national media is reporting out there, and kind of say, hey, this is not necessarily the case in all areas, and for me in the Washington D.C. metro area, there is a different dynamic going on here where we actually have had appreciation going on over the last 6 months or so, and it looks like it's going to continue to trend that way. There was an interesting article by Scott Van Voorhees that was from Boston.com, was basically reporting on your survey and had basically said that it looks like the homeowners actually, like you said before, catching up to real estate agents as far as the realism of what the market is bearing there. It said, second only to Virginia, 29% of homeowners also believe that an imminent rebound in prices is there. And these are high priced areas where there's not nearly as many foreclosures going on. So I think that would lead to more optimism in those areas.
But one thing that we haven't published individual state results, but we did do a table of the top 10 states where homeowners and real estate professionals think home prices will go up and down. And what the Boston Globe is pointing out is that in Virginia, 29% of homeowners actually think prices will increase over the next 6 months, and in Massachusetts, 22% think that. But now if you contrast that to what realtors think in those states, in Virginia, 58% of realtors think that home prices will go down over the next 6 months, and in Massachusetts, 56% of them think they will go down. So it's perhaps that the homeowners in Virginia and Massachusetts are seeing a pretty good market, are seeing prices going up, but real estate agents perhaps are in the market every day, and maybe they're seeing something, in the last couple of months that makes them believe that the home prices aren't going to hold their levels and may trend down. Now, we don't ask them how much they'll go down by.
Right.
We just ask them whether they think they'll go up or down over the next 6 months. But it is interesting, again, you see a divergence in what homeowners think, what real estate agents think, and I would have to bet that the real estate agents, the realtors, would have a better sense of where the market is heading because they're in the market every day. They're talking to buyers and sellers, and they're seeing this. Whereas, as you mentioned, the homeowners are subject to what they read in the media, seeing signs, anecdotal evidence, and so on, and some wishful thinking.
We're talking with Louis Cammarosano, the general manager of HomeGain. We're discussing the HomeGain third quarter national home value survey results. And it's interesting, though, Louis, the one thing that it's kind of confusing here because I know that in this DC metro area, the values have been appreciating over the last 6 months. So for the agents to be saying that they're looking for a decrease, it doesn't exactly add up in my head because obviously the Fed's long-term goals are to keep long-term interest rates low. If you're keeping interest rates low, obviously we already have a supply. I mean, there's not much supply of homes as far as rental properties and or sales that are available in these areas. There's been multiple contracts which are creating bid-up situations. If low interest rates are to prevail over the next year, I would think that the likelihood of increase in prices would be relatively high.
Well, there is some support in the survey for that as well. Virginia was in the top 10 for real estate agents that think home prices will increase, with 8% of them thinking they will increase over the next 6 months. So there are some real estate agents. In general, most real estate agents think that home prices are going down. In Virginia, at least you have 8% of them that think that they're going up.
Yeah, and you said also, I remember we were talking off air that your survey tracks very closely with the Rasmussen poll, which was 40% of homeowners over the next year think that home prices will decline. So it seems like this is, it's tracking very closely with that survey as well.
Right, and our poll shows that 45% of homeowners think home prices will decline over the next 6 months. So the difference between the Rasmussen poll and ours is not just the 5%, but they asked the question over a year. And our poll also very closely tracks at least with respect to the homeowners, the Rasmussen poll, the Obama approval ratings.
And what did they find as far as the Obama ratings? What did that read?
Okay, so what we have for the Obama approval is, let's pull it up here. I'm looking at the results for the realtors, which is very negative. But with respect to the homeowners, 47% of homeowners strongly disapproved and 16% somewhat disapproved of the president's performance, which is a 63% disapproval rating. Rasmussen had a 56% disapproval rating during the last quarter, and 39% strongly disapproved. So there's a bit of it. Homeowners are slightly more opposed to the president and the general population, that they're general likely voters at Rasmussen surveys. But now on the realtor side, 55% of agent and broker surveys indicated they strongly disapproved and 17% somewhat disapproved, which is a 72% disapproval rating. So the real estate professionals are clearly not in Obama's camp versus the homeowners who are a little more favorably disposed, and then the general voting public is even more disposed than homeowners and realtors.
We're talking with Louis Cammarosano, the general manager of HomeGain. We're discussing HomeGain's release of the third quarter 2011 National Home Value Survey, discussing the Obama approval rating. And I think it's interesting that it's, obviously I could see it being very high for real estate professionals because most of transactions are dependent upon people's employment, whether they're going to be able to afford that home or be able to purchase a home. And with the unemployment rate where it's at now, that would mean that there's a smaller pool of people that are out there that are willing and able to purchase properties right now.
And there's a smaller amount of homes being sold, that's
Yep.
right, and they're being sold at a lower average order size. So the real estate agents are really hurting because they're making less money. And, that's the Reagan question they asked in 1984. Are you better now than you were 4 years ago? And most real estate agents are going to say no. And as we mentioned last week, the economic environment is generally blamed on the sitting president for right or wrong.
Yep, absolutely. I mean, I think that that's definitely what's going on now. It'll be interesting to see how things played out. I was telling you that there was also a Bloomberg survey that just came out on basically with the jobs plan that Obama came out, and most people think that it's not going to do anything, which I think is probably going to be the case leading up to the next election. Not much is going to get done. If they do get anything passed on that bill, it'll be something that they both can agree on, which isn't going to be much. Um, and the Fed meets again this week. It'll be interesting because a lot of the markets are thinking that the Fed's going to do some sort of stimulus, buying into basically long-term, longer dated note of bonds. So which basically what it's going to do is they're going to try to hold long-term rates down as much as possible. What my question is, Lewis, is they're already extremely low. Do they think that they're going to go from 4 to 3%? Because I just don't see that happening.
Well, I don't think that's what the intent is. Not necessarily to lower the rates. That's one of the byproducts. It really is to be able to reinvest all the short-term treasuries, which means they have to buy them and reinvest them in the long term, which means it's a continuation of the quantitative easing or the money printing.
Correct. That didn't work before.
Well, nor did the first stimulus, and that's
Yep.
why it's interesting that the second stimulus now, if all these bridges and roads are falling down, how come they weren't fixed in the first stimulus?
Yeah.
So I think there's a lot of public skepticism over whether the government can pick or industry winners or winners within an industry. And, you got the whole Solyndra. I don't know if you're following that one, the perceived scandal there where $500 million was invested into that company and it went bankrupt about 5 months after the investment. Well, it wasn't an investment. It was a loan guarantee. But, of course, if the company goes under, then people are out the money. And I guess what's happening right now is people are starting to realize that people in government don't understand business, especially since most of them don't have a business background. And then they really can't pick winners or losers. And if they do, they're favoring one over the other based on political beliefs or contributions. And we've seen that the government's a poor administrator with this Solyndra scandal as to whether they can actually learn how to invest in companies or whether even they should be doing it. And you only have to point to the post office that they don't know how to run entities at a profit.
Yep.
So it doesn't look good for the jobs package. Plus, even if all of those negative factors were positive and the government somehow could miraculously pick winners and did know how to allocate capital, and it wasn't based on any political deals, we don't have the money for it, supposedly, and not when you owe $14 trillion. So it's going to be very difficult to pass a jobs bill, and jobs don't come quickly, even if you just allow the free market to work out the excesses in the economy. It's not going to recover by election time unless there's some dramatic artificial stimulus. And I think that's what the job plan is for. And if it doesn't go through, I think that'll give the Fed more cover to try to print more money.
Yeah, and there, like we were discussing before too, there's a lot of these backdoor or deals that are going on. I actually just pulled an article earlier this morning that California Representative, I believe it was Darrell Issa, is actually questioning Fannie Mae for the purchase of Bank of America portfolio. That was a $500 million purchase from Bank of America of 400,000 troubled loans. These loans had an unpaid principal balance of $73 billion as of August of 2011 when the Wall Street Journal reported that they had decided to sell this package because its value was expected to deteriorate further. Now, my question is, why would Fannie or the government want to buy troubled loans? Well, it's basically telling me that they know that Bank of America was in trouble and that this is something that they had to do to prevent further deterioration of Bank of America.
It's basically another bailout. Why would anyone buy bad assets? Bad assets are supposed to, in a free economy, be liquidated. They're not supposed to be purchased by someone else.
Exactly.
Unless they're purchased at a market value, which would be
like 30 cents on the dollar.
At least, or lower, right? Depending on what Well, and there's also the whole concept of public doesn't have any control over this, where the money goes. And that's where I think the outrage is over these bailouts, because people don't vote on them. No one in their right mind would buy those things, so therefore why would someone expect their government official to vote for it?
Yeah, absolutely. When we come back, we're going to jump in why you can buy 77% more of a home today than you could 10 years ago. Stay right there.